Alright, hello and welcome to Camel Finance. I'm your boy Camel, and as you can probably see by all of these tabs, there's a lot to get through today. There is trading and macro towards the end. There are some wild news in here, some crypto news as always. So anyway, let's just jump straight in and start getting through this. We are coming off the back of an ECB, that's the European Central Bank, rate hike. But this is kind of a comedy rate hike because consumer inflation is over 8%, and that's by their own CPI metric. It's double that in the real world if you calculate it the way they did prior to the C19 era. And just imagine living in Europe where your heating bill is rising to 10 to 20% of your income and you have massive inflation, and the central bank might hike up to 0%. So they did, of course. That wasn't even the mainstream expectation. That was viewed as too hawkish. They have, of course, done this now. They were expected to raise by 25 basis points. They ended up raising by 50 basis points. But the facts are the facts, and the facts are interest rates are currently at 0%. So in the last 90 days in crypto, it's been pretty wild. We've had the Luna collapse, $80 billion. Luna dumping $3 billion in Bitcoin in just 48 hours. Tesla have dumped $1 billion in Bitcoin. BlockFi have dumped almost $1 billion. Celsius have gone bankrupt. Voyager have gone bankrupt. 3AC have gone bankrupt. We've had a BlockFi bailout. Miners capitulating in 300 million size, and the ST ETH depeg. So it's been kind of wild. We're going to get onto Elon in just a second, but it wasn't just crypto people that have been affected, because a Canadian pension fund, CDPQ, had invested $150 million in Celsius last October. So some of these pensioners are going to be suffering. The pension fund is going to be suffering. This is not good. And going back to Elon, Bitcoin and crypto are not contributing for a environmentally sustainable future yet. So this is according to Elon. But the hilarious thing about all of this is it's provably wrong. How much Bitcoin mining is renewable energy in 2022? Well, nearly 2/3. Okay, and depending on which metrics you use and how you measure it and where you get your data from, you can come up with a figure about 10% above this as well. So this is demonstrably wrong. He was quoted as saying something along the lines of he would be willing to accept Bitcoin again once the renewable energy for mining was over 50%. So it's already over 50%. But I think ultimately this is why we've seen Elon and Zach sell 75% of their Bitcoin. And it was to avoid a major impairment loss. It's actually kind of a smart move. They reported 2.6 billion in non-GAAP profits. So you can see here that them dumping their Bitcoin, selling 75% for a small loss, allowed them to protect enough capital to lock in a 2.6 billion non-GAAP profit. And this has led to the share price being up 13% over the past 5 days and about 10% as of yesterday. So say what you like, but protecting capital does not make anyone stupid. Yes, people in the Bitcoin space like to have diamond hands, like other people to have diamond hands, but this notion of never selling is somewhat silly. You have to at least sell to take some profit at some point, right? And there's also nothing wrong with protecting your capital and therefore your share price if you're the CEO of a company. Lastly, I would not be at all surprised if it later comes out that he sold around 30k or 29k, I think is where he got out, and then bought it all back at 20k or sub 20k. That would not surprise me at all if that news comes out over the next few days to weeks. So I'll keep my eye out for that and definitely be reporting back on it as and when it happens. The crypto exchange ZipMex has become the next one to halt withdrawals, citing the current market conditions. Whilst we're on exchanges, the Gemini exchange has been granted a virtual asset service provider registration in Ireland. And Coinbase, the ex-Coinbase manager, has reportedly been arrested in an insider trading case. I've got a couple of clips to show you next. And these form part of what I believe will be a macro trend, a mega trend for the rest of this decade. So I want to quickly show you, not all of these clips because they're quite long, but I want to quickly show you these and then comment.
Sorry, are we not being clear? We're trying to tell you that the entire planet is about to be destroyed.
Okay.
Well, it's, just something we do around here. We just keep the bad news light.
Oh, you see, John, you're outside.
So that was a clip from a film, Don't Look Up, on Netflix apparently. And then here's a clip of a real life news interview.
By early next week, you can scrap 20 degrees. It could well be 40 degrees. I think there will be hundreds, if not thousands, of excess deaths early next week. The charts that I can see in front of me are frightening. So we all like nice weather, but this will not be nice weather. This will be potentially lethal weather for a couple of days. It'll be brief, but it'll be brutal.
Oh,
so,
John,
we can
yeah. So John, I want us to be happy about the weather and everything. I don't.
So that'll do for that clip. Next, I got this photo which I thought was interesting. In 2017, everything's green and in the 30s to the mid 30s, and in 2022, we're only in the mid 20s or the early 20s, and it's all red. So what's the point I'm making here? Well, the point I'm making here is this is going to become the next theme. This is the CNN technical director. He was caught red-handed. The CNN tech director speaks about instilling the next fear, which is all going to be to do about the weather, since the C-19 era is no longer... Most people aren't scared of that anymore. So anyway, I've got a clip of that to show you.
This story comes up, they're going to latch onto it. They've already announced inner office that once the public will be open to it, we're going to start focusing mainly on climate, like global warming, and like that's going to be our next, like I don't know, like what's the word I'm looking for? It's going to be our focus. Our focus was to get Trump out of office, right? Without saying it, that's what it was, right? So our next thing is going to be for climate change awareness.
What does that look like?
I don't know. I'm not sure. I have a feeling it's just going to be like constantly showing videos of like decline in ice and weather warming up and like the effects it's having on the economy and really talking about the head of the network, like just...
Who's that? Is that Zucker?
Zucker, yeah. I imagine that he's got his council and they've all like discussed like where they think
so that's like the next
pandemic like story like that will be to death. But that one's got longevity. You know what I mean? It's not like there's a definitive ending to the pandemic, or like it'll taper off to a point that it's not a problem anymore. I think it's going to take years, so they'll probably be able to milk that for quite a bit.
All right, so that's enough of that. You can go watch that clip if you want to see. But so why am I bringing this up? Well, I'm not trying to give an opinion on whether I believe in any of this stuff or not. What I'm trying to say is, I think it's safe to say that we know the weather is going to become a focal point for the rest of the decade, and therefore we could potentially profit from this by positioning into things that are green and renewable. So this is something that I think we should have in the back of our minds. It's also something that is kind of crazy just to see them openly talk about this. Well, it's not open obviously, but to see them talk about this is kind of sobering but not surprising. Speaking of the weather, the heat wave has passed and Texas has resumed mining after a week-long voluntary pause. So during the hot weather, people have to run air cons much more intensively. It takes a lot more drain, puts a lot more pressure and strain on the power grid, and so the miners can just switch off and save the grid from excess strain. And then once the heat wave has passed and the excess power is not needed for things such as aircon, then they can all switch back on again and prevent surges and wasted power and that sort of thing. That's great to see. The UK Finance Minister has announced a bill for the use of stablecoins that will be introduced before Parliament tomorrow. Tomorrow was actually on the 20th of July, and so this has been done. But the thing is, the Finance Minister is Rishi Sunak, and he is currently running for Prime Minister or some level of promotion. I don't follow politics. But the long and short of it is that not much got done, and they are going to have to push this back by a couple of weeks. So I will report on this as and when they get round to sorting that out. 51% of owners in Southeast Asia used it to preserve wealth, according to an AAX report. And the Singapore Central Bank recorded a net loss of $7.4 billion, which is the first loss in 9 years for the Singapore central bank. Central banks continue to take on losses, and what I noticed is this comes at a time when the Singapore central bank has revealed plans for turning the country into a Bitcoin and crypto hub. So is this a coincidence? Well, of course it isn't. In China, you may well have seen this. People are rioting and protesting outside the banks, and they've even parked a bunch of tanks outside the banks to try to protect them. The craziest part of all of this is the Bank of China declared that the people's savings in their branch are now investment products and can't be withdrawn. So this is exactly why I do what I do. This is exactly why it's important to have Bitcoin and gold, physical gold outside the system, and gold and Bitcoin on crypto that is kept on a cold wallet so that it cannot be confiscated from you. You cannot ever be told that it's now an investment product and you can't have it. So not your keys, not your coin, not your cash in your hand, not your money, right? But make no mistake, central banks are going to continue to debase their fiat currency because we're in the end stages of a fiat currency cycle. So you really better opt out. You better get Bitcoin, you better get gold and silver while you still can. Josh Hawley has called for the Senate hearing on banning lawmakers from trading stocks, and he mentioned Paul Pelosi's recent purchase of Nvidia, which I think he made like 7 times his annual salary in a month just from trading this stock. The thing that I think is coming off the back of this is I think they're going to blow this market off to one new high. I think we get this Fed pivot. I think we get one new all-time high, one big blow-off move, and then they use this blow-off move to let all of the lawmakers and Congress and stuff out. That's what I think happens. They let them all out of the top, and then they go, oh, well, you guys wanted it, right? You wanted these people to sell all their stock, and now it's their fault that we've passed this law and they've had to sell it. We forced them all to sell at the top and cause this next recession, which I believe is the recession that leads us into the CBDCs. So we'll see how that goes. 44% of the yield curves are now inverted. Still not at the 50% mark that has historically been a precursor to recessions, but we're getting dangerously close. It seems like we may or may not be able to narrowly avoid a recession. I think we're already in a recession personally, but I guess it depends on how you measure it. If you haven't seen the Fed pivot indicator, here it is, the average of the 5-year yield and the Fed fund rate multiplied by the national debt. What's interesting is as they gear up for a 75 basis point hike in a couple of weeks, they would be, well, it's actually next week, isn't it, on Wednesday, they would be knowingly blowing up the system. What's also interesting is if you add this and then factor in a 3% yield, then this would take the number over 900, which would be roughly around here. So that would be an enormous deviation from this historical resistance. So we will see if that happens or not. If you're new to the channel, and I know a lot of you are, then you won't necessarily know this opinion. If you're not new, then you know probably exactly what I'm about to say. But think about it. We're in a recession. It's soon to be confirmed, and we're likely going to get a few months of CPI prints where the inflation comes in below expectations and shows deceleration from the first half of the year. The yield curve is inverted. Why wouldn't the Fed pivot? And this is exactly what I was about to say. If you've been watching the channel, you know we have had this yellow vertical line denoting when I expect a Fed pivot to be announced there or thereabouts. I mean, that's just marking the 1st of September, but I think sometime in September. That's what I've been calling for weeks. And like I said, if you've been watching the channel, you'll already know my opinion on that. If you are new, if you're one of the new guys, then hello and welcome. And this is what I think is going to happen. I think we get to around September time and we get a Fed pivot. So I'm looking out for that. In the meantime, Bitcoin accumulation trend score setup is looking very similar to past bottoms. So as you can see here, here, and here, we've got a trend score of 1 telling us to be open to a reversal in the near future. In hindsight, it's really easy, right? When you get down to these levels for both realized price and relative strength, then historically, if you buy, you do very well afterwards. And that's exactly where we are. We look to have made a low, turning back up on both of these metrics. So let's see. This also comes at a time when the RSI is, of course, bouncing from record oversold conditions. And if you think Bitcoin can't go on a tear from here to 100k in the next 6 months, then you just haven't spent enough time in this market. And so here's Bitcoin, right? The thing is, when we do make these bottoms, we go up incredibly quickly, right? Here's a bottom, up incredibly quickly. Here's a bottom, up incredibly quickly, right? It doesn't take long. And so if you think that this is entirely impossible, then you just haven't been around long enough. But am I saying I think this is going to happen? No, I don't know. I have no idea what's going to happen. But if you think this is off the table, then you're definitely wrong, because this is one of the possible scenarios. Before we get into the rest of the charts, I've got a clip that beautifully explains proof of work versus proof of stake. Again, if you're familiar with this channel, then you'll know I do not support proof of stake. I think it's kind of a joke, and this is basically why.
One of the things we talk about on our crypto show a lot is proof of work versus proof of stake. We have people come on like Joe Lubin who really defend the idea of proof of stake and saying that it's going to be even more secure. I know he does. But what's your take? I mean, Ether is a big challenger.
Disclose that to the SEC. No, it's not. So first of all, using energy is not a bad thing, Matt. Like, engineering and the use of energy is implied in like the growth of humanity. You know what else uses a lot of energy? An airplane. So I tell you what, you don't like energy. Next time you and the wife go to Europe, you take a kayak, I'll fly United. Next time you want to save and grow your family's wealth, you use the dollar, I'll use Bitcoin. Next time you wash your clothes, you hand scrape your kid's stain out of the white t-shirt, I'll use a washing machine. But since when was using energy a bad thing? I mean, come on, like, it's absolutely asinine and ridiculous. And even the carbon footprint, I mean, it like incentivizes, it's the best use of energy. You know, like what an airplane can't do, or your washing machine, like make use of excess energy of a waterfall. So it helps stabilize the grid. Like, if you want an asset to have a commodity premium, which, you know, this room knows what that is, creating money can't be free. Like, guys, what are we talking about? Like, the fact that if a lot of people want to create Bitcoin, it becomes more difficult is why the thing works. Your relationship with Bitcoin is not a liability, okay? Your relationship with Bitcoin is not a proxy to some foundation, some team, some corporate structure, some development decision. In fact, the founder of Bitcoin, he, she, or they might be dead. And it's working really well, Matt. That's what Sailor means when it's a property. There's no liability relationship. Proof of stake, your relationship with that asset's a liability. A stablecoin, your relationship with that's a liability. In theory, what you want is a monetary asset where there are no liability relationships. That's the whole point of the thing. That's what proof of work solved that.
All right, so let's get into some charts. The dollar is trying to bounce. I think it's going to be under some pressure in the not too distant future, but it's really going to ultimately do nothing until the FOMC on Wednesday, and then obviously we will get some direction. So we'll leave that. S&P, if you've been watching the channel, you'll know we had this breakout. So how far does this go? Nobody really knows. You'll also know, if you're watching the channel, I didn't take that trade. I took this one. So continuing to push the NASDAQ for as much as I possibly can. I also have JD Sports, which I will continue to push. I think wherever this sort of bounces, get some sort of bull flag and resumption, then I'll take all the risk off of this trade. Oil, I'm still not interested in until we get a trend line break. Gold is becoming very interesting for me. I've got this as the trigger, or this trend line, whichever comes first. We have wicked perfectly into this 1680 level, which if I zoom out a bit, you'll see exactly why. Double bottom and then this sort of capitulative wick into. So the only concern for me is it's how you get there, right? So here we led in, double bottom, and went. Here it was just a capitulative move down and then straight back up. Here we've taken like a very slow bleed down here, which leads me to think that a double bottom could well be on the cards here, or perhaps consolidation before we go. So I'm not looking to jump in here. This could be a trade. There's nothing really wrong with this trade per se, but I like to have a little bit more confirmation wherever possible. So I'm going to wait a little bit, but make no mistake, I will be notifying you as and when it's time to get long, or at least as and when I get long. So if you want to see that, make sure you're subscribed, turn the notifications on so you don't miss it. I will likely be playing this with silver as well. So as and when gold has convinced me it's got a bottom in place, I will be taking a long silver, and possibly a long silver miner as well. I really like to trade this instrument, but that's just a personal preference of mine. But play that how you like, I guess. Bitcoin looks like it's trying to make a push towards this 25 and then 30k range. So like I said earlier in the video, if you think it can't do this, then think again, because it can. Do I think that's the most likely outcome? No, I don't, to be honest. I think we get sort of a push into 30k, and then sort of, I think we've got to come down and make some level of low around the November time. But that remains to be seen. For now, we've just got to try and push this and see what we can get from it. Ethereum is apparently breaking out from a bull flag, so we've had some consolidation and now we're going to go. So I guess this target of 2200-ish is going to be coming into focus for Ethereum, so I'm really happy with that. MATIC is looking to break out. I think it's above that. Looks like it might be. Yeah, it's not convincingly yet, but potential entry for MATIC there, targeting all the way up at $1.75. So we'll see if we can get to that. Our experimental chart, still keeping an eye on. It's not really changed much. If you know, you know. And look at this. The 10-year bond yields had a fake out, a false dawn, and then slapped back down. So I was saying that it wasn't a convincing breakout like last time. If you watch the prior videos, you'll know. I was saying that we sort of meandered out of here, and it wasn't until we got above this that we could take it as a rise. So this is telling us that we have to be open to having seen peak inflation, and we should be more concerned about growth risks. Of course, oil and other commodities telling us that we may well have seen peak inflation too. So perhaps FOMC on Wednesday can ignite some sort of risk on rally. I knew I was forgetting something. UKX is another position of mine. So long and strong, going to continue to push this. If we can take this high out up here, I think this local one, and preferably this one as well, then I'll take some of this risk off. I don't know, move it up to here or something like that. So that's that anyway. That's the trades. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and follow us on Twitter. We have got the Fed meeting and stuff next week, so it's going to get choppy. I'm going to be taking some risk off today so that I'm not carrying loads into the weekend next week, because I expect a lot of chop. There's always chop and manipulation, isn't there, around the Fed meeting? So make sure you're subscribed. I'll continue to post content, and I hope you enjoy your weekend. I hope you're doing well in life, spiritually, emotionally, and physically. And look after yourselves and your family. Take care. All the best. Cheers. Bye.